There we go. Hey, I'm Mitch Goldberg, your host. You're watching my live stream, Be the Boss of Your Money, every Monday through Thursday. Monday through Thursdays at 4:30 p.m. We talk about investing, personal finance, interest rates, crypto, inflation, you name it. We talk about it here so that you could be the boss of your money, so that you could take control of your money. The inflation numbers came in the consumer price index this morning, red hot, the highest they've been since I entered into the securities industry in 1990. We're going to talk about that, what it means. We're going to have a good show. So let's get on with the show now. Here is the intro. All right, we're just getting started. We're talking about inflation. We're talking about the stock market. We're talking about personal finance, the Federal Reserve. There's so many things going around. They're all attached. Personal finance. Let me say the stock market. It's like bodies of water. Ultimately, they're all almost all bodies of water are attached one way or another, right? So it's hard to isolate one aspect of the financial markets without talking about so many other things. That's why it's so hard to talk about this stuff succinctly and concisely. So that's what we're going to talk about, though, and I'm going to do it. While you're watching this, if you have any questions, you know I love hearing from you, so please ask away in the comments. I get all giddy when I get questions in the comments, so make my day. And let me know where you're watching from. And you know what? While you're watching, I want you to know I have a YouTube channel. It's called Client First Strategy. I'm on Instagram at InstaMitchG, LinkedIn, Mitchell Goldberg, and Facebook. We have a Facebook page, Client First Strategy. And every day I post highlights from these shows. Every day I find highlights. We find highlights. We post them. I should say Natalie finds the highlights and she creates these square videos, puts in the artwork, and just takes out a highlight from my live streams. And that's what we post in our social media channel. So if you want to see those, there's a little bit of education in each one. Follow me somewhere on social media. I post them on YouTube as well. So if you're just joining us, we're talking about inflation, markets. Why did the market come down today? What does this mean for high flying stocks like Tesla, Nvidia, Alphabet, which is Google, and so many other stocks? And are we legitimately, should we legitimately worry about inflation? I mean, look, yes, we should always be concerned about things. We should always watch for things. But being concerned or watchful for something, that's one thing. But worrying is an emotion. Worrying about something is when we haven't done anything about a change to our external environment. Worrying means that you don't know what to do. You don't know what to do next, so you worry. You don't know how things are going to turn out, so you don't have control over that. That's what creates worry, aka anxiety. And we need to address this, at least with your money. And so we've got a couple things to tie into this. Okay. So let's take a look at the overall markets. We'll start from the top, work our way down. I want to show you Tesla. I want to show you AMC and aftermarket trading, Beyond Meat, Disney. I mean, what's going on now with some of the stocks that have become very popular, it's pretty bad. But Disney is getting pounded in aftermarket trading, and that's the kind of thing that really could throw a whole market off. It's one thing if like Beyond Meat goes down, whatever. It's still a niche company. But Disney is such a stalwart and in so many investor portfolios. Okay, so let's take a look. Pop myself up in the corner here. Dow is off 0.66%. Okay, you see that over here, down 240 points. Okay, not that 240 points is such a big deal, but after a couple of days in a row of 100, 200 points, it does start to add up. Still, the Dow over 36,000. We don't really have a lot to complain about. I mean, if you're an individual stock investor, there's a really good chance that you could be having a down year this year, in spite of the major averages having such a good year. So it's not necessarily easy just because the market's up, right? NASDAQ is down 263 points, down 1.66%. Listen, I've always said this, 1% move or more in a major average definitely gets my attention. So NASDAQ got hit pretty hard today. S&P also got hit today, down 0.82%. Gold, though, up 22 points. I've been saying gold above 1,800, if it could stick above 1,800. That tells you that the inflation transitory people are thinking really inflation's not so transient. And yes, I know. Look, the way Jerome Powell defines, Jerome Powell is the chairman of the Federal Reserve. He's the one who came out with the phrase transient inflation. He describes transient in, a couple of years, not necessarily like 3 months or 6 months. And he's still sticking to that. And he still believes that as supply chains loosen up and we have a proper supply response and we start getting goods into ports, off ships, onto rail, onto trucks and distributed, that'll happen. And there's evidence it's happening now, and we're going to look at something to show you that. But the point is, gold, like people have been saying crypto's an inflation hedge. I think crypto is more a function of massive investor enthusiasm and global adoption, which is why crypto's going up. Gold is not going through massive adoption. It's been adopted as an asset class for thousands of years. It's just that now it's finally demonstrating its inflation countering characteristics. Oil is off a little bit. Oil went up yesterday because people are hoping that President Biden would release oil from the Strategic Petroleum Reserve. He said no, so oil went up. Today, oil is just off a little bit. And if you think inflation is here and the economy is too hot, then why the heck is oil down 3.5%? 10-year Treasury jumps. We're just getting conflicting signals. Like with inflation, if inflation is sticking around, the market should be down. The stock should be down more. Gold up, yes, but oil should be up. And the 10-year Treasury, the 10-year Treasury, in my opinion, should be 2.5% or higher. It's only 1.58, 1.56%. Yield up a little. The VIX continues to go up to 18s. Remember, it was 15, then it was 17. We spoke about that 2 days ago. It was up like 12% in one day. Continues to move higher. We see 20 in the VIX. That's when you get your little minor correction and where you start to kick yourself and say, damn it, I knew I should have sold this stock or that stock. Why did I get so greedy? But before that, when the stocks are going up, people are like, oh, they're going higher. They're going higher. Got to hold on. That's what goes on. Russell 2000 was off 1.5%. Russ 2K, that's the benchmark small cap stock index. Okay, so let's move on. The apes are a little pissed. The CEO of AMC Entertainment, we call the diamond holders the apes. Okay, this says here $25 million. CEO of AMC Entertainment is selling a lot of stock, and the stock is down below 40, obviously, and we'll see how that goes. But AMC, Adam Aaron, he sold $25 million in shares Tuesday. Hey, look, why not? His company was going to be left for dead, and the stock was going to be worthless. So, thank you to the hodlers, the Robin Hoodies, who pumped up the stock so that this guy could sell some shares and get liquid before it finally plunges again. Speaking of plunge, Disney misses across the board with slowing streaming growth. By the way, Disney still had streaming growth for Disney Plus, just not as much growth as investors expected. But Disney is off 3.3%, 3.1%. Okay, now 3%, down $5. It was off almost 10 earlier today, but that's the kind of thing that stings because it is a pretty big component in the S&P 500 and an even bigger component in the Dow Jones Industrial Average. Beyond Meat, I'm sorry, Rivian. Ugh, what do we say? Let's look at Beyond Meat. Beyond Meat, okay, missed wider than expected loss for its third quarter U.S. sales. U.S. sales actually shrank. All right. Shares are, let me see where shares are. Okay. Shares are down, let me get it, down $16 down. So between today and aftermarket trading, Beyond Meat is down over 20%. So this stock was $221 down to 78. I'm thinking my friend Brad, who told me about this documentary he watched on how bad meat eaters, how bad cows are polluting the earth and we're destroying forests to provide more meat protein for consumers globally. So that was the reason to buy Beyond Meat for him. And the stock continues to get pummeled. All right. So that's Beyond Meat. And that's it. So I want to show you something though. This is a little different. The Baltic Dry Index. Okay. There's an article going around that says maybe inflation has peaked. The Baltic Dry Index, and this got popular like around 2008, 2009 when people were so let me put myself up here. The Baltic Dry Index became popular around 2008, 2009 when investors were just so desperate to see some sign of a turnaround in the U.S. economy and the global economy, after the Great Recession. So people would come up with all kinds of indexes and statistics that you never heard of, and the Baltic Dry Index became pretty popular. And that is basically the cost of shipping goods. And when the cost of shipping goods goes up, it could be inflationary. It could also be a sign that the economy is heating up because there's more demand for freight services, freight services by sea. Okay. But lately, and let's just go to the last 6 months, the index has gone from about 5,600 to 2,800. So it's been cut in half. Let me see if I could show you that. Okay. Yeah. So here's the Baltic Dry Index, and it's gone recently, early October, from about 5,600 to a month later, in just a month, down by about half. So the Baltic Dry Index is telling you maybe that the shipping congestion by sea is moderating. Okay, that's what this is telling you, and that's why there are a lot of people who are looking at this and are saying, don't panic over supply chain issues. They're starting to sort themselves out. Now, we've been talking about these supply chain issues for so long. I think it bears repeating, though. The supply chain issues will, the supply chain issues will be resolved. But it's not going to be an event. It's not going to be like one day, it's all solved today, everything is perfect, like flipping a light switch. It's a process that you will barely notice on a day-to-day, week-to-week basis. But as the weeks go by and the months go by, it will become very evident that the flow of semiconductor chips and all kinds of other products, from sophisticated products to commodities type products, these are going to be moving, and you'll see that. This, and that's why a lot of people feel that the inflation figures are transient. Now let's talk about inflation. Wages have gone up. Wages typically don't go backwards. Now, wages could be stagnant for a long time, but once certain jobs pay more money, or people start earning more money, let's say for working in a retail job at Target, or fast food at McDonald's, or working in a car dealership, a mechanic, what have you, when wages go up, they tend to stay up. Now, they could moderate, they could stop going up, they could become stagnant for a while, but we are stuck with certain costs that have risen. Not everything is going to go back down, but things like materials, those are expected to drop, not the cost of labor. The cost of labor is a really big component in most things. It's the biggest component. So that's why inflation is here to stay. But we measure inflation month to month, year over year. Even if we have high inflation now and prices go up and they stay elevated for month after month after month, as long as they're not going higher, they're just elevated from where they were last year and they stay the same in that elevated position, then it's not really inflation. Or the inflationary trend has stopped. Okay, so those are the things to talk about. So while you're watching this, you are welcome to hit me up with any of your questions. I see a few people out there. Josh is out there. Jerry, hey Jerry, haven't seen you around, man. It's good to see you. Are you in New York now? You in Florida? Where are you hanging these days? So those are the things going on. We've got a either a question or comments, and oh yeah, we got some people out here. Okay. Always so insightful you are. Thank you, John J. Robertson. You are, you're always like such a good guy. You truly live that mantra. If you have nothing nice to say, don't say it at all, because you always say nice things. You give real value to your clients with your knowledge. Thank you, sir. I appreciate the compliment. Now, Ken is out there. I gauge everything by the chicken wing index. 16.99 for 10. I'm in full panic mode. Holy shit, 16.99 for 10. I don't eat a lot of chicken wings. Not since our days at like Sutter's and the across the street pub. And haven't been into like a Buffalo Wild Wings in a couple of years. But I have to check that out. It's like 16.99 for 10. $1.69 for a wing. That's getting up there. I mean, I don't exactly feel full after 10 wings. I mean, you're talking appetizers, yeah, but I like to make my wings a meal, really hot, blue cheese all over the place, and a couple pieces of celery as well. Yeah. So thanks for tuning in, Ken. I appreciate that. How are things in PA, by the way? It sounds like you are adjusting very well and you are absolutely loving it there. And I'm really happy for you. But if you're on Long Island sometime, please let me know. I know you're in Jersey all the time. I'm a little jealous. Okay. You didn't come to Long Island this year? What's going on with that? All right. So that's really the big story. Do we have inflation? Okay. All right. So just so you know, everyone, John Robertson says food prices are out of control. I promise. Wings are $16.99 in many, many places. John is in the food business. The name of his company is called The Sexy Salad, but they do catering, especially corporate catering. They do a big lunch crowd. And he also had a really nice farmer's market going during the pandemic closure last year also. In fact, he's been a guest on my show twice. So if John says it, you know it's true, because he is a foodie. He's a food guy. And I don't know, he's in the food business. Okay. So here's the thing. Does the Fed raise interest rates sooner than we expect? We all know the Fed's tapering. The tapering should be done by June. Maybe they accelerate the taper. And then it's expected that the first interest rate rise could come in July or August next year. Now people are thinking maybe in June the Fed has to raise rates. If the Fed really is behind the curve on inflation and it has to raise rates sooner than expected, there could be two outcomes. Okay. And one of them is good. The first one is if they're behind the curve and they have to jack up interest rates, they slow the economy. They want to slow down price increases. And they do that by hurting you, by hurting the economy, slowing the economy down by raising rates, by making everything more expensive. Okay. Because interest rate costs go up, and interest rate costs are like everything in our economy. Or they could acknowledge that inflation is up, and investors could feel that the Fed is taking aggressive steps to contain it, which in turn could make investors feel better about inflation and say, hey, the Fed's got our back here, and this is a good thing. Inflation will hurt the high-flying, high-duration stocks. I'm not talking high-duration bonds. I'm talking high-duration stocks. High-duration stocks are like high PE multiple stocks, or stocks that are trading based on price to sales, or because they don't even have earnings, so there's no PE ratio. Those are the kinds of stocks that would get hit in a rising rate environment. And what is favored would be banks. So we're going to take a look at the how the major sectors of the market did, and then we'll pretty much be done with the show. I know I call it the show because I get to make pretend that I'm a TV personality and I get to do this. It's fun. It's fun. I love doing this. You have to understand, like I my day revolves around my live stream. I know at 4:30 I have something for certain. I mean, I have appointments and all that, but this is just every day. I love doing this. Okay, so utilities are the winners of the day. Consumer staples are the winners of the day, and healthcare. Financials, I would have expected financials to have done a little bit better. Discretionary was okay. What's at the bottom? Energy. Well, energy's been such a leader recently, but it's not going to go up every single day. I spoke to a Newsday reporter about a week ago. Actually, we didn't talk. We went through an email exchange, and he asked me, do I think it's a good idea for investors to hedge their home heating oil bills by buying energy stocks? So maybe if your energy bills going up, your heating oil bills going. We use a lot of heating oil on Long Island, so if your heating oil is going up, you should buy energy stocks because they'll go up too. My point is, energy goes up and down for many reasons. Hey, energy goes up and down for many reasons, and if someone is having trouble paying their energy bill that they need to hedge it with a stock, they probably cannot afford to buy stock, and they probably don't have any business trying to pick individual stocks or individual sectors to make up, uh, with capital gains to compensate them for a rise in the price of heating oil. Okay. So we'll see if the article comes out. If it does, I'll let you know. But I think it's like um, very silly for individuals to try to hedge their home heating oil rise, their rise in their home heating oil bill by buying, Chevron or Exxon or something like that. I mean, I'm not saying it can't work, but this is for someone who really has the sophistication and the coin to do it. If someone is really worried about being impacted by their energy bill, if a few $100s per month is what's going to make or break your life financially, you're probably not someone who should be hedging oil with stocks. And if the stocks go down, by the way, energy stocks could go down even when energy prices go up. Okay. Philly, what happened today? I'm here, but my hair is not. LOL. Nice haircut, buddy. Okay. The inflation that we've been talking about, it's here. Is it peak inflation? The 10-year treasury finally moved up. Gold finally moved up. Those moving up at the same time confirm suspicion of inflation. The point of this is inflation out of control, or is it going to moderate? Does it moderate at a higher level than what it was in 2019? That's the general consensus. Inflation moderates. We talked about the Baltic Dry Index. If you missed, I'm just trying to catch everybody up. So that's where we are. I thank you all for watching. If you have any questions that you think of after the live stream, just hit me up in the comments. I will definitely see those and be back tomorrow. Thank you.